coronavirus outbreak is hitting Apple's supply line sales and the broader market as well. Company shares, as you can see here, are down 1.7%. Apple says it does not expect to reach its revenue targets for the quarter. The news from Apple is dragging down the Dow. The Dow fell as much as 280 points. It is now off the lows of the day, down about 140 points right now. The coronavirus outbreak is hitting Apple in three key ways. Let's take a look here. First, final assembly at the massive Foxconn factory in Zhengzhou, sometimes called iPhone City. That's one key way. Even though it's outside Hubei province, which is the epicenter of the outbreak, many workers have not been able to get back. Many of those that have returned have been placed in quarantine, one per door room. That means this complex can only house a fraction of those it would normally have. And the second, the suppliers. Shares of all of these companies, let's take a look here, actually fell on Tuesday. Some of them are inside China and facing their own worker shortages. Others are simply selling less than usual, with iPhone assembly lines running slowly. And third, Chinese consumers. Apple has 42 stores in mainland China, and most of those actually do remain closed. Clare Sebastian is joining us live here. Clare, we were talking about this earlier in the day. And so for Apple, when you think about what they're going through, factories closing, stores closing, and now just the fact that they are dealing with so many issues when it comes to their supply chain, what does that mean for global supply of the iPhone?
Well, it's unclear as yet, but it was quite a definitive statement from Apple. They said worldwide iPhone supply will be temporarily constrained. Not might be, not could be, not we expect it, will be temporarily constrained. So whether that eventually trickles down to the consumer and we see delays in shipments, well, that I think depends how long this goes on. But as you laid out, this is a double whammy for Apple. It's demand side, it's supply side. And I think given that, it's actually surprising just how little the stock has fallen today. When we saw them warn about demand from China about a year ago, the stock fell 7% that day. Today, it's proving remarkably resilient, and it's still staying within a couple of percent of a record high.
When you think about the tech sector more broadly, if there's any company that can handle this sort of crisis, it is Apple. You use the word resilient. I would certainly use that adjective to describe this company.
I mean, it's interesting because Apple is exposed in the sense that, unlike a lot of other tech companies, it's a hardware company. I mean, it's selling things and making them in China. But it's resilient because of its performance, really, over the last year. The stock has basically almost doubled. It's been producing new models of iPhone, which have been really well received. It spent the most of the last year diversifying away from the iPhone, worrying about sales of that flagging, only to find in the last quarter that the iPhone sales had also come back. And meanwhile, they'd ramped up their services business to become basically a standalone Fortune 100 company with revenues of about $12 billion. And this company, Zain, made $22 billion in profit in the last quarter. That's more than any American company ever in a quarterly profit.
Okay, so they're doing something right.
It's pretty strong right now. It's pretty strong right now.
And what does the Chinese market actually mean to Apple going forward?
Yeah, so in the last quarter, I mean, it's their third largest market. It's the US, European Union, and then Greater China. They made about 14% of their sales in China in the last quarter. So I think in terms of demand, that's important. There were already concerns that iPhone sales were flagging in China. So that's something definitely to watch. But I think supply is, you know, if not an equal, then perhaps even a bigger issue, because the vast majority of Apple's products are manufactured in China, and it's really going to matter how quickly these factories return to normal, and it's taking longer than they expected.
Right, Clare Sebastian, iFirst there, thank you.